There are things that could theoretically break Bitcoin. There's quantum computing as a risk. There's governments banning it as a risk. There's developers accidentally introducing a bug into the Bitcoin code that's catastrophic. That would be a risk. I suppose there's a risk that people could just lose interest, particularly if US governments, slashed spending and reduced the budget deficit. So all of these are risks. So there's a risk that it could go down substantially. I think it's very small, but I do think there is that risk. I think actually the track record suggests it's been a good inflation hedge. And I encourage people, if they close their eyes and imagine US CPI running at 10 or 15 or 20%, and ask yourself where you think Bitcoin will be. I think when most people do that exercise, they realize that Bitcoin would probably be very much higher because people would be running to it. So I do think it's a good inflation hedge.
Matt Hougan opens the discussion by highlighting Bitcoin's unique position in the financial world. He describes Bitcoin as being in an unstable equilibrium, where it's too significant to be ignored but not yet large enough to be considered systemically important. This precarious balance, according to Hougan, can't last forever. He believes that Bitcoin is still in the early stages of what could be a long-term trend toward becoming a multi-trillion-dollar asset. Hougan points out a striking disparity between the current institutional ownership of Bitcoin and other traditional assets. For instance, US stocks are owned 79% by institutional investors, whereas crypto is owned by only about 1% of such entities. If crypto were to mirror the institutional ownership levels seen in traditional assets, it would require a massive influx of capital, potentially in the trillions of dollars. This gap, he argues, underscores just how early we are in the institutional adoption of Bitcoin and other cryptocurrencies. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
As I mentioned, I think we're at this sort of unstable equilibrium where it's too big to be irrelevant, but too small to be systemically important. And I don't think it can sort of hover in this intermediate land forever. And so I think it's early enough that we're still going to slide down that slope to be a multi-trillion-dollar asset. But the other thing I would point to is just from a numbers perspective. Like if you look at US stocks are owned 79% by institutional investors. If you look at crypto is owned maybe 1% by institutional investors. If crypto were to look like the US stock market, institutional investors would need to buy $1 trillion of Bitcoin at the current price. I'll give you another example. Central banks hold 19% of all gold. If central banks had to buy 19% of all Bitcoin, they'd have to buy hundreds of billions of dollars of Bitcoin. I'm not saying that institutions will own 80% of Bitcoin or central banks will own 20% of Bitcoin. But the point I'm making is that most of the money in the world right now has zero exposure to Bitcoin. The ETFs just launched. They were the most successful launch of all time. They're the fastest growing ETFs at BlackRock, at Fidelity, at Bitwise, and others. But we're still like 6 months into probably a 10-year transition of this asset being retail owned to institutional owned. And so if it looks like every other asset in the world, there's still so much money that has to come into this space just to normalize it, that I think we're pretty early. So in a portfolio context, it's sort of the greatest alternative asset in the world. If you strip the name Bitcoin from it and you stripped all the angst that comes around with crypto, you would be left with an asset that has high potential returns, no guarantee, but high potential returns, extreme liquidity, right? 24/7, 365 liquidity, and historically low correlations with other assets. If you put that into a portfolio optimizer, it's going to love it. It's not going to want to put 100% in, but if you put a small allocation, 2, 3, 4, 5%, historically you've increased risk-adjusted returns. It's hard to find non-correlated liquid assets with return potential. Usually either they're illiquid, like early stage venture, or they have no return potential, like short-term treasuries. This combines all three. And so, yeah, it functions like hot sauce in a portfolio. Like a little bit makes it taste a lot better.
And do you consider Bitcoin a good inflation hedge over the long run?
I do. Yeah. I think actually the track record suggests it's been a good inflation hedge. And I encourage people, if they close their eyes and imagine US CPI running at 10 or 15 or 20%, and ask yourself where you think Bitcoin will be. I think when most people do that exercise, they realize that Bitcoin would probably be very much higher because people would be running to it. So I do think it's a good inflation hedge. I have a high degree of confidence on where Bitcoin is going eventually. But I actually don't know how fast it will get there. And actions that I don't control will influence how fast it gets there. What happens in the US election will influence how fast Bitcoin gets there. What people do in terms of debt and deficits will influence how fast it gets there. Unexpected crises will influence. So as you have these developments happen or not happen, it influences the price of Bitcoin. If this were an early stage technology company, like a Series A technology company, but being priced in real time, we would see the same kind of volatility. It's just an early investment. The difference is it prices in real time, so you experience that volatility. There are things that could theoretically break Bitcoin. There's quantum computing as a risk. There's governments banning it as a risk. There's developers accidentally introducing a bug into the Bitcoin code that's catastrophic. That would be a risk. I suppose there's a risk that people could just lose interest, particularly if US governments, slashed spending and reduced the budget deficit. So all of these are risks. So there's a risk that it could go down substantially. I think it's very small, but I do think there is that risk. It's the first ever money that's existed that's been created without government control in a digital format. So you just had an episode on gold. People are interested in gold because it's a non-sovereign store of value. The value of gold doesn't depend on what Janet Yellen or Jerome Powell or leaders around the world do. It's the value of gold, right? And it's probably inversely correlated to inflation in a currency. Bitcoin is similar. It's an apolitical currency, the value of which is not determined by a bank or a government. And you can own it without relying on any central bank or any central government. And that's what it is at its core. I think it's interesting for two reasons. The first reason is that not everyone trusts fiat currencies. Over long track records, fiat currencies have a terrible history. They all effectively go to zero. They get inflated away. And many people are experiencing that or worried about that in the US, not just sort of tinfoil hat people, but folks like Ray Dalio, right, and leading entities. Bitcoin is an alternative rail to that and a hedge against that. And the second reason I think it's interesting long-term is I think the world wants a non-political currency. If you pattern out 5 or 10 years and we're living in a multipolar world, I think there's a reasonable chance that countries will want to transact not in dollars or renminbi or euros, but they may want to transact in a non-political currency. And Bitcoin is actually the only viable non-political currency that can handle like a global transaction layer. So I think it's interesting as a personal store of value, and I think it's interesting in the future as this apolitical currency. And I think both of those are multi-trillion-dollar markets.
Hougan is also realistic about the risks associated with Bitcoin. He acknowledges several potential threats to its continued success, including quantum computing, government bans, and the possibility of a catastrophic bug in Bitcoin's code. Despite these risks, he views them as relatively low probability events, particularly in the near term. Hougan stresses that while Bitcoin is a highly speculative investment, it also represents a groundbreaking innovation as the first ever form of digital money created without government control. The conversation then shifts to Bitcoin's comparison with gold. Like gold, Bitcoin is a non-sovereign store of value, meaning its worth isn't tied to any government or central bank. This apolitical nature of Bitcoin is one of its most appealing attributes, especially in a world where trust in fiat currencies is waning. Hougan points out that Bitcoin's value proposition is similar to gold's in that it provides a hedge against inflation and currency devaluation. But unlike gold, Bitcoin is much more functional in terms of its ability to be transferred quickly and efficiently across borders.
The volatility is going over time. It is going down over time. If you think back to the first day of Bitcoin, when it first launched, and there were only two people in the world who cared about Bitcoin, and the price was effectively set between those two people, Bitcoin's volatility was infinite, right? At any moment, one person could just decide they're not interested. It would go to zero. And then when there were 10 people and the government might ban it, its volatility was massive. And if you go back to the early days of Bitcoin, it's indeed, 4 or 5 times more volatile than it is today. There were many times when Bitcoin's value would drop 50% in a day. It's going down a slope as it becomes more clear that it has a long-term place in the world. Right now, it's too volatile to be used as a daily currency, right? Like my mortgage is in dollars. I can't be paid in Bitcoin. There's too much volatility. But I would argue that it's gotten to the point where it's sufficiently stable to be used as a store of value. If you look since COVID, we were talking about COVID, US dollars lost 25% of its value. Bitcoin is up something like 800%. It's a pretty good store of value. People forget that even gold itself is pretty volatile. Bitcoin's slightly more volatile than gold. That means you have more upside. Eventually, when we're using Bitcoin to settle oil trades in the future, which I actually do think we will do, it'll be boring. And investing in Bitcoin will be like investing in gold. Investing in gold is pretty boring. Investing in Bitcoin will be pretty boring, but it has to follow this journey. You can't create a store of value that emerges from nothing and is instantaneously stable. It's logically impossible. It has to follow the journey that it's on, which is declining volatility, increasing price. And I think that will persist into the future. I think of it as digital and functional gold. So I do think of it as digital gold because it's a non-sovereign store of value. It doesn't depend on any government or entity, and you can hold it yourself without relying on anyone. So it's very similar. The two differences are, one, it's much less established than gold. That's why it's more volatile, and also why it has more return potential. But the other half of it is it's much more functional than gold. If I need to send you, well, let me frame it another way. I have a Bitcoin ETF. It holds $3 billion of Bitcoin. That, if it were gold, would weigh something like 10,000 pounds. And if I had to send it to you, I'd have to hire a tanker or an airplane, and it would take days or weeks or at least, hours to get to you. I could wire you Bitcoin and it would settle in the next 10 minutes. And so it's a more functional transactional currency. That's why I think, and I know this is an out there idea, that's why I think that in 4 or 5 years, it'll be used for international transactions. You can't really use gold. It's so hard. Yes, you can move it by name in one vault from one person to another, but you can't actually send someone gold. You can really send someone Bitcoin. So I think of it as digital and functional gold.
Hougan envisions a future where Bitcoin could serve as a global, non-political currency. As the world becomes increasingly multipolar, with various powers competing for influence, the demand for a neutral medium of exchange could grow. Bitcoin, he argues, is uniquely positioned to fulfill this role because it's the only viable non-political currency that can handle global transactions. Hougan addresses Bitcoin's volatility. He acknowledges that Bitcoin's price swings are still too extreme for it to be used as a daily currency for most people. However, he points out that Bitcoin's volatility has been decreasing over time. In its early days, Bitcoin's value could drop 50% in a single day, but such dramatic moves are less common now. As Bitcoin continues to mature and gain wider acceptance, Hougan expects its volatility to decrease further, eventually stabilizing to the point where it can function as a reliable store of value much like gold does today. Please like and subscribe my channel.